Welcome to the Financial News Network. I'm Chuck Pierce, and today we're looking at real estate investment and one of the firms that's making waves in the Canadian market. With me today is President and CEO of Partners Real Estate Investment Trust, Mr. Adam Gant. Thanks for being with us.
Thank you for having me, Chuck.
All right, first, there's a lot of real estate investment funds out there. What is Partners REIT all about, and what makes you different than others?
Sure, that's a great question. I mean, we're a pure play retail shopping center REIT. So we own necessity-based retail centers across Canada, from Montreal all the way out to the west coast and Vancouver Island. We're primarily focused on shopping centers that have a food or grocery anchor, drugstore anchor, and those factors really drive a lot of customer traffic into these properties on a daily basis, regardless of how the economy is doing. So it gives us great stability in our rental income stream.
So a lot of trusts actually are focused on real estate and real estate centers. Why would you get into that with such high, competition?
Sure. So it's actually interesting looking at the different markets and the number of different players. I think in lastly in the last 12 months, there's been a few consolidations. So there's actually fewer competitors now today for us than there were when we got started. We actually took over this REIT 2 years ago and have been building it up fairly aggressively. So it's been a great growth story. In our experience, we've had some great results so far. But really, we're still at the beginning stages of that growth and still see a lot of opportunity ahead of us. So we do have a very positive outlook for the future for the REIT. Okay.
And what is the next acquisition that you're looking at right now? What's the new thing that you're excited about?
Well, I think we're always looking to find the highest quality, the newest retail that we can acquire. So the new format retail shopping centers that are either brand new construction or have very fresh anchor leases on them. So it gives us a very long-term stable income stream to forecast out into the future. So any of the new acquisitions we're looking for these days, definitely where we can pick up that food and drug anchor, as well as some of the other more well-known smaller retailers that would go into those properties, and something to add more accretive income to the portfolio that we have today.
All right. Anything, specific that you're looking at right now?
We're always looking, and we've grown from 130 million in assets to just shy of $500 million, as I mentioned, in the last 24 months. So that came with a number of acquisitions and really being aggressive out there. And we find that we're not as often acquiring assets that have gone out to market and been in an auction. We find that we're usually acquiring the assets that we found through relationships and through people coming to us and seeing that we've closed on a number of deals and wanting to work with us in that way. So that does give us a bit of an edge.
All right, and some recent news. Partners REIT just got listed on the OTCQX exchange.
Yes, that's right. Yeah.
Tell me a little bit about that.
That's something very interesting for us. I don't know how many other Canadian REITs are available for U.S. investors to get exposure to. I think the great thing about the QX exchange is we're listed on the TSX, which is the main exchange that we report under, and the QX really provides a U.S. currency-based quote for our units. And the great part about our units is because we have 100% of our distributions that we pay out is covered by our depreciation on our assets, there's no withholding tax on the income stream going across border. So from a U.S. perspective, it's a great way to take advantage of the Canadian real estate market stability there and get a great income stream, as currently we've got a very strong income stream that we're generating from the assets.
Have you seen anything in terms of your liquidity after being listed so far? I mean, it's pretty early right now, so.
Yeah, definitely. It was just in the last week, so I think we've certainly seen good liquidity in the last 3 months in general, and it continues to improve as we grow in size and there's more and more or larger institutional owners. But I think over the next 3 months, we'll probably get a lot more exposure in the U.S. as we're down meeting with some different groups, and we'll likely see that liquidity improve further.
All right, and lastly for our viewers, if you could make the case as to why they should invest in Partners REIT.
Well, I think if you look at the consumer confidence trends, we've had very stable consumer confidence as it relates to retailing centers. That provides a stable stream of revenue for the retailers and therefore stable occupancies for the landlord. I think for us, we represent kind of the trifecta, which is the growth story, undervalue in the sense that we're trading currently at around just over a 12 times FFO multiple compared to the 15 times multiple for the industry average. And we've got a great yield, just shy of 8% currently, and that creates a great income stream while you're seeing that growth happen over time, and the tax efficiency that we talked about.
All right, great. Sounds exciting.
All
right, well, thank you very much for being with us, Mr. Gant.
Hey, very much appreciate being on the show. Thanks, Chuck.
All right, and for more interviews like this one and more financial news, keep it right here to the Financial News Network at fnno.com.